Facing technical difficulties. Please stand by.
The market is always having technical difficulties, but Money Life can help. Every Friday, we're talking technical analysis.
We've come for help and we're not leaving without it.
Are you confused by the technical jargon and terms?
This is what makes you confused! Don't you get it? This is confusing you right now, isn't it?
Our guests will talk about the techniques they use each day to analyze the market and tell you what they see now in some of the market's numbers and charts.
Please stand by. Technical difficulties are temporary.
They'll tell you about the trends they see and how you might react to them to plow through the market's technical difficulties.
Yeah, I'm pretty confused, all right.
So stay tuned and get ready to cut through the confusion with Chuck Jaffe talking technical analysis on Money Life.
I'm joined right now by Toni Turner, president of the Trend Star Group. She's one of our favorites here for our technical difficulties segment on Money Life. She's the author of Invest to Win. She is on Twitter at Toni Turner Trade, and you can find her online, get more information about her books and all the other stuff she does at ToniTurner.com. And if you follow her on Twitter or you check out her website, well, you'll know that right now, like a lot of folks who are looking at charts and tracking what's happening with the market, she's a bit nervous. She's never nervous to be with us, though. So, Toni Turner, welcome back to Money Life.
Thank you, Chuck. I appreciate your asking me.
So, like I said, you are a bit nervous right now. That is apparent. What are you fearful of, and how likely is your nerve-wracking scenario when it comes to coming true? I mean, if you had to put being nervous is one thing, putting a probability on your nightmares occurring is another.
Okay, well, as you probably know, on Thursday, we're looking here at the S&P 500. We're looking at the IWM, which is the symbol for the Russell 2000. We're looking at the price of oil. We are noticing that the FXI, one of the China ETFs, or any of the China ETFs you want to pick, is moving lower again. We are trying to find some good news here for investors to look at or buyers to look at and come in, and they aren't showing up. So with European banks down and oil on Thursday below $27, and Fed Chair Yellen still thinking maybe she'd raise rates or maybe she won't, and nobody's really sure. And it's a dicey time right now, Chuck. We're watching the S&P 500 here, and we're watching the level at 1812 because we're thinking if the S&P goes below 1812 that we could potentially have another move down, and the move down, and it won't go in a straight line if it goes this way. Please don't anybody think that. It will not. But another move down could take us to possibly 1600. That would be the measured move, as we call it, on a longer-term chart. So we're at a place here that we're watching to see if this market can bounce and rally. Certainly bull markets are a lot more fun than bear markets for most people. Most people don't sell short.
Yeah, but you're still talking about a pretty significant haircut. If we're talking about roughly 1,800 to roughly 1,600, that is still taking off 1/9. That's a move of more than 10%. So the question is, when you're looking at the charts and you're looking at what's going on, the charts tell you one thing. The other side is there are underlying real causes that are based in things beyond the charts. Do you look at this and wonder if it's at all stoppable, or is this something that, to some extent you look at and go, this has to happen?
Well, and everything's stoppable in the market. When people say, and goodness knows people say it all day on network everything and shows such of yours, they say, okay, oil's going to $10 here, and the S&P 500 is going to 1,200. And you know what? What I have learned over the last 20 years in this business is that absolutely nobody knows where the market, the price of oil, the S&P 500, the Russell 2000, absolutely nobody knows where it's going next. We don't know what's going to happen tomorrow. And there could be some really good news come in of some kind that we didn't expect. A lot of times we call these things exogenous shocks. Sometimes they're good, sometimes they're not so good. But things, certainly the globe is in enough turmoil right now that some things could happen that would maybe, and of course this is probably the right thing for the wrong reasons, but that could move the price of oil up dramatically, or that could move the indexes higher. So nobody really knows. All we can do is take history on a chart. We know that human behavior usually repeats itself. We know that this market got long of tooth, the bull market got long of tooth. We know that markets move in cycles. So we just have to kind of take our best shot and prepare, that's all, and be wise and leave fear out of it because that limits our thinking. Just think as clearly as possible and, protect.
For investors who are looking at this, some are going to hear you talk about the potential downturn and they're going to say, I want to try to sidestep it. And it's one thing if they're doing it with the help of somebody like you. It's another if they're doing it on their own.
Mm-hmm.
Because what I just heard you say was, well, on the one hand, you sort of seem to be pretty convinced that we are going to see this kind of a downturn, but we could see support. We could see the other things that stop it from happening. So is this a case where, this move is not going to be big enough that people want to start heading for the sidelines and doing the rest of that? This is a hedge your bets, a little of everything, and kind of hold your nose and ride it out? Or is this a case of if you see the S&P get down to that 16 level, et cetera, you will have suffered enough pain, and, oh, by the way, there might be more coming, and maybe you want to be out of it?
Well, when markets go lower, it's the old 80-20 rule that's everywhere. 20% of stocks will be going higher. Some kind of something that trades independently of the market pretty much will be moving. Like right now, gold is flying, and everybody said, what? How could that be? So there's always places you can get in. There's always companies. Every single company does not head south. If a company has bad fundamentals, and yes, I'm a technical analyst who looks at fundamentals, if a company has bad fundamentals, it's probably going to get swatted around pretty badly in a down market because nobody's going to want it. If the company is a pretty decent company, then the institutional traders will come in faster and buy it when it's down. So these kinds of markets are stock pickers markets, but certainly if you want to hang out in defensive places, of course there are utilities and bond-like stocks and telecom and so forth. If the market heads below this, say, 1812, 1800 part, and you've got some profits in some companies that are momentum stocks that are very volatile, you might want to take some profits. I think that's a wise thing to do. And, maybe you get back in a little later on if it's a lower price. So I think right now being cautious is wise. We put insurance on our homes, our cars, our bodies. Why wouldn't we think we close our shutters when hurricanes come?
Yep.
I'm in Florida. I know all about that. So why wouldn't we? And it also depends on your time horizon. If you're 30, you can shrug it off and go to the beach. If you're 60, maybe you want to take some profits on some of your positions, again, if this market falls below, say, 1800.
Well, Toni, really interesting stuff. We will check in with you and see how you're feeling about the market as things move forward later in the year. Look forward to it.
Hey, thanks, Chuck.
Toni Turner is the president of TrendStar Group. For more information, ToniTurner.com. She's on Twitter at Toni Turner Trade. We just got off to a great start on the Friday edition of Money Life. Up next, Mike Jolin from Heartland International Value as Money Life rolls on right after this message.